Well, good afternoon, and welcome to this week's webinar presented by Beresford Booth. My name is Per Oscarsson. I'm a lawyer in the business and real estate group here at the firm. My topic today is, what is the Washington real estate excise tax? We'll cover a few more issues besides what is the tax, because if we limit it to just that question, this webinar would already be over. So the first thing, the real estate excise tax is a transfer tax as opposed to a property tax. So it's a tax when you transfer your interest in real estate, as opposed to a property tax, such as the one that most people are familiar with. That's a tax on the ownership of property. That's an annual tax. The transfer tax, or the real estate excise tax, only applies when you're transferring property. And as we'll see, there are some times when even then it does not apply. There's also another situation where actually the ownership of the real estate does not change, but it's the if you have an entity that owns Washington real estate, and that could be a Washington entity, it could be an entity created out of state, but if it owns Washington real estate, if there's a change in control of that entity months, that will trigger a real estate excise tax. And basically the change of control in a very general sense is if at least 50% of the ownership of that entity, whether it be a corporation, which hopefully does not own the real estate, or a limited liability company, or even a limited partnership, for example, if there's a 50% change in the ownership of that entity over that 36-month period, that will trigger a tax. So as I said, it's a transfer tax versus a property tax, and it's the consideration for the transfer that is at issue here, as opposed to the assessed property value. The assessor of each county assesses the property, and that's what the property tax is based on. When you have the real estate excise tax, it's the consideration that's being paid for the transfer. I'll come back to consideration in just a moment. So here's a little bit of how the state portion of the real estate excise tax is used. So you see here for the state portion of the tax, 79.4% of that goes into the state general fund, 5.2% goes to public works assistance account, 1.4% goes to the city county assistance fund, and the remainder goes to the education legacy trust account. There's also a local component to real estate excise tax, and the requirements for the use of the proceeds of that tax will vary depending upon the population of the city or county in which the real estate is located. Primarily, it's to be used for capital projects. Until December 31st of this year, a portion can be used on existing capital projects, but it could also be used for services to residents of affordable housing or shelter units. Now, in contrast, here's how property taxes, at least in Snohomish County, could be used. Now, this will vary from jurisdiction to jurisdiction. Some cities may have some things. Some counties may have some things. I think in Eastern Washington, I have seen on occasion, there are assessments for noxious weed control. We don't typically have that in Snohomish County, but here are some of the things that property tax could be used by the city or the county. And again, we'll talk a little bit more about how that part of the tax works. Could be the Central Puget Sound Regional Transit Authority, school districts, the Port of Edmonds, for example, public hospital districts, fire districts, conservation districts, surface water. There are various surface water issues where there are assessments specifically dealing with surface water issues. And then there are some city, county, and state things that even the local tax or local portion of the tax is used for. So consideration. Consideration is the value that's given for the transfer of the real estate. This can take many forms. It could be cash. It could be payment of existing debt. It's a very broad category. It includes tangible items. Other property could be used. If, for example, if other real estate is used, the value of that other real estate is going to go into the consideration for purposes of determining or calculating the real estate excise tax that's payable in the transfer of this particular property. It could also be for services performed or to be performed. That kind of adds another layer of complexity, if you will, because now you've got to determine what's the value of those services. If the person providing services is doing it on an hourly basis, you got an hourly rate. Well, now you've got to figure out how much time is going to be required to do that. And keep in mind that if you underestimate and the state determines that you have underestimated on any of those, the real estate excise tax affidavit that has to be filed can be audited, and the transaction can be audited, and additional tax can be assessed, and potentially interest and penalties. So, like I said, we had the state and we have local components to the real estate excise tax. The state component is a graduated tax. So 1.1% of that consideration, of the first $525,000 of consideration, the tax rate's 1.1%. It's 1.28% on the amount that exceeds the $525,000, but does not exceed $1,525,000. It's 2.75% of the portion of the consideration that exceeds $1,525,000, but does not exceed $3,025,000. And then it's 3% of the amount of consideration greater than the $3,025,000. These numbers were adjusted last year, I'm sorry, and they will be adjusted again in 2026 and every 4 years thereafter. So what will typically happen is the very first number, the 525, that one will be adjusted by the state. I think it's based on a certain consumer price index. And then each of the other ranges will be adjusted by exactly the same amount. So they won't apply, if it's a consumer price index, you would typically take, say, 2% of each value. Well, they're not going to do that because that could potentially change everything after the first number because of the ranges. So they will take whatever the change is to the 525,000, that change will be applied to each of the next sets of numbers, including the last one. One difference here is that timberland or agricultural land is just taxed at a flat rate of 1.28% of whatever the consideration amount is. We did not have a graduated rate until a few years ago, and 1.28% was typically the state rate. And then there was a local component, which we will get into here. So the local component it's either 0.25% of the total consideration, or it's 50%, or 1/2 of 1% of the total consideration. And that percentage is determined by each jurisdiction. So each city determines the percentage within its corporate limits. And the county then determines the rate for all property that is in unincorporated portions or areas of the county. In Snohomish County, for example, I think all but one of the incorporated cities has a rate of 0.5% or 1/2 of 1%. The county rate in Snohomish County is also 1/2 of 1%. There is not a duplication so that you get a county and a city portion. If you're within the corporate city limits of any of those cities, Everett, Edmonds, Snohomish are examples. In fact, I think Darrington, is the only one that is at 1/4 of 1% of the incorporated cities. But if it's within the corporate limits of the city, there is only the city percentage. The county percentage does not get somehow factored in or added to it. So here's an example. If we take a property in the city limits of Edmonds and it's sold for $4 million. So here we have the state portion is 1.1% of the first 525,000 or $5,775. We take 1.28% of the next million, which is the range that you saw on a previous screen. So that's 12,800. 2.75% of the next $1.5 million. Again, that's the range, so we just take it on the $1.5 million. And then 3% of the amount over $3,025,000. In this example, that's $925,000, resulting in a tax on that portion alone of $29,250. So the state total portion is $89,075. But to that, we need to add the local portion. The local portion, Edmonds, we're at 0.5 or 1/2% of the total $4 million. That puts us at a $20,000 local portion of tax. So the state and local total gets us to $109,075. But there's a $5 technology fee that gets added to that. So the total tax in this example would be $109,080. We could do an example maybe with something smaller, say something in the $2 million range. But again, there you've got 1.1% on the first 525. Then we're going to have the 1.28% on that next million. But then we'll have the 2.75% is just on the difference between the ranges. So you're just going to get a smaller value. So your resulting tax, if you're going to figure it just in a ballpark figure, is figure out what's the consideration being paid, and then just kind of you're going to be less than the percentage on the highest bracket for that consideration if you're just doing a ballpark number to estimate tax. So there are a number of exemptions from the real estate excise tax that can apply, and they're provided by state regulations. One of those is gifts. If it's an outright gift, there's no consideration paid at all, then there is an exemption, complete exemption from the real estate excise tax, and the only thing you pay is a technology fee and another administration fee. That's a total of $10 when the real estate excise tax affidavit is filed. The affidavit is still required, but it's required primarily to claim the exemption. You'll see on the screen here, we've got refinance assumptions. So if there's a gift, but there is some underlying debt on the property, then if the grantor, the giver of the gift, is continuing to pay the property or pay that debt, for example, an outstanding mortgage loan, as an example, then that is a gift, and all of it is a gift. But there are certain assumptions that are made on refinance. So, for example, if a refinance occurs within 6 months of the transfer, and that could be 6 months after the transfer, then it is not presumed to be a gift, but presumed to be a kind of a disguised sale, and there will be real estate excise tax. If the refinance occurs more than 6 months, it's still presumed by regulation to be a gift, and there is no real estate excise tax. Distributions from an inheritance. That could be in a probate estate. There are other ways where an inheritance can result in a transfer of real estate, and as long as the documentary evidence required by the regulations is provided, you still get a complete exemption from the real estate tax. That's not true if the estate sells the property as opposed to distributing it to an heir or a beneficiary. If it's a sale, it is as if it's a sale by any other person. It's also true that if you inherit the property, as the recipient of that property, there's no real estate excise tax on the transfer by which you received the property. However, if you then turn around and sell the property, whether it's within a day or two or years, there would be a real estate excise tax on that transfer, unless there's some other exemption that may be available at that time. So another example is creation or separation of community property. Husband and wife could own property, but maybe they bought it as tenants in common. They can give a deed to themselves to create the community property. Alternatively, they may have community property, but for whatever reason, they may want to create separate property between them. And so there can be a deed that separates the community property. There is an exemption for that, and therefore no real estate excise tax. If you contribute to a revocable trust, and it could be one that you have created, there is also an exemption. Typically, if you create a revocable trust and you're transferring property into the revocable trust, it's really as if you didn't really change the ownership of the trust of the property, because although you may have transferred to yourself as trustee of the revocable trust, basically, since you can revoke the trust at any time, it's viewed as if there hasn't been a transfer. A distribution from a trust can also be subject to an exemption if there's no consideration for the transfer. So, for example, the trust may provide that at a certain point, property is to be distributed to the trust beneficiary or beneficiaries. And if that's the case, then there's no valuable consideration given for the transfer. There should be the exemption available such that no real estate excise tax is paid. However, if there's a distribution, but the trust may require, for whatever reason, and it might be unusual, that the recipient gives something in return, then there will be tax, and it won't be subject to the exemption. Another exemption that's used quite often, and it's kind of the last two on this screen. For example, if you create a limited liability company to hold asset, for example, a rental property for purposes of asset protection, and you take back an interest in that limited liability company in exchange, under federal tax law, typically a contribution to an entity for that purpose is not subject to tax at the federal level. And for that reason, there's an exemption that exempts it from real estate excise tax for the same reason. Same thing can be true when, for example, the limited liability company, maybe it's dissolving and it transfers the property out to its members in dissolution. There are federal income tax exemptions for those kinds of distributions, and there's kind of an associated real estate excise tax exemption in the state of Washington for the same kind of distribution. Certain court orders can result in exemptions. There may be a court order in connection with a marital dissolution action that requires one of the parties to transfer their interest to the other spouse, or now ex-spouse. And as long as it's done in conformity with the court order, there can be an exemption available to you. If it's done later without requirement of a court order, that could be subject to the real estate excise tax. Transfers from Chapter 11 and Chapter 12 bankruptcy estates are also have an exemption available to the real estate excise tax under Washington regulations. But it appears to be that only those two types of estates. Chapter 11 is a reorganization. Chapter 12 is farming. And so only from those two estates. There are other bankruptcy estates possible, but the regulation does not specifically include them. Sometimes you'll have a foreclosure of a mortgage or a deed of trust, and as a result of that, there will either be a sheriff's sale of the property upon foreclosure of a mortgage. A deed of trust could result in a trustee sale. And in either case, then the deed that transfers the property to the successful buyer at that sale, that one also results in exemption, and there's no real estate excise tax. There are other exemptions available. I didn't go into all of them here, but there are other ones that are potentially available depending upon your circumstances. So with that, I conclude. That's not to say that I've covered everything about real estate excise taxes. If you have any questions, please give me a call, or call anyone here at Beresford booth in the Business and Real Estate Group Department, and we'll see if we can give you some assistance on that issue. Hope you'll join us next week when one of the members of our litigation group will present the webinar. Thank you very much. Enjoy the rest of your day.